Rick here with a recap for Thursday, October the 13th. Kind of a wild day on the market today, which resulted in a slight change to our risk model. SPY now trading just slightly above the 8-day moving average, and the Q is right at it. But the trend for those is still down, but in the next day or two, those could turn up. Good move, but nothing too much to get excited about, as I'll show you in a second with the charts. Rid of this. So the major indexes were all up around 2 to 2.5% for the day, but that really doesn't tell the whole story. As you can see from the chart, we gapped down a bunch. So the move actually from the open to the close was more like 5%, which is very, very sizable. In fact, that's the biggest one-day bar that we've experienced probably this year. Not sure about that, but it was a big move. Let's expand that out a little bit. Why I say this is nothing to get excited about, I'm actually going to take this back. If we rewind the video a little bit back to the beginning of the year, and we look back here after this big precipitous decline back in January, we had a similar looking kind of day. We had a, it didn't gap, it opened here, went down, and then ripped back up again. But this is a very wide positive bar. But look what happened in the days following. Spread this out. It really didn't get much traction. It mushed around for a couple of days, then finally reclaimed the 21-day moving average, and then just rolled over again. And then a few weeks later, same thing. We had another big green bar here in February. After 4 or 5 days down, this one, I can't see where it opened, but yeah, it opened on a gap down, flushed out a whole bunch of people, and then ripped up. But again, this one didn't have much follow through. So 1, 2, 3, 4 days got up to the 8-day moving average, and then just rolled over again. Then we rallied up here. Remember this rally in March, getting all excited. We're going to go back to new highs. Got right to the 200, then whoops. So again, here in May, another gap down after a prolonged drop. Got 3 more days of follow through, but really just barely got above the 8-day moving average before it rolled over. Tried another little recovery, got up to the 50, got us a little excited in May, and then rolled over again. And then we didn't have any other really big whoosh days until today. So jury's out. I mean, every rally has got to start with a green day. But I'm not entirely optimistic that this is the start of a new bull market. Expectations are, I mean, we did get to the 8-day moving average. We might get up here to the 20, might even get up here to the 50. And this would be a nice move, a very tradable rally up in here, but only for basically short-term traders, because expectations are this is going to roll down. Now, if it doesn't, then we'll be prepared to go long again and maybe investing for the longer haul. So that's my take on that. My positions, I had UNM. This one really annoys me. On the gap down in the morning, I didn't cancel my stop order. I meant to, and give it say a 30-minute low as a new stop, but I forgot about it and got shaken out. I mean, the loss was like $300, so it's not a big deal. But then it just ripped higher and closed at a new all-time high. So boat missed, but this one may set up again for another entry. Fundamentals still look good on this company, so missed that one. It's too bad. Twinkie, Hostess Brands, another good day. I'm in one entry here, took another entry a couple days ago, or yesterday, I guess it was, above here, and it went over 25. So that's about a 4% gain in 2 days. So I took half off the table today. If I look at the longer term chart, weekly. This one has really had a big run. And this is what I call a late stage base, which I'm going to go into in more detail in my upcoming tutorial on what to buy. But, you know, it's got into a stage 2 uptrend right in around here. So this is a base, the first base. Then it based again here. So that's second base, then a third base, and then a fourth pullback, and then a fifth. And so really this is a very late stage base. So they have much lower probabilities of working out. And even if they do work out, you're not going to get the huge gains. This one basically has gone from 12 bucks to it's doubled in the last year. It's not likely to do that again over the next year. So I took a partial and we'll just ride the rest and see what happens. I took a new position, a small position in a biotech stock. Good chart pattern at an all-time high here. Pulled back, but it's really holding this this move and went from 7, it almost doubled, went from 7 to 13. This is what we term a power play. Actually, this base here should be 8 to 12 to 15 days long. I'm a little early on this one probably. So that's why I just took a small position and we'll add to it on a break above this base right here. But right now it's right at my entry point. I did take a position in TNA, and this is a good one to have a look at. This is the small cap index, the triple leveraged. I'm going to zero down to a 5-minute chart and go over what traders might have been thinking this morning. So this is 5-minute chart of the an ETF which tracks the small cap index, but it's a triple leverage, so it's highly volatile. Which for a lot of traders, this would scare the crap out of them, because for every dollar that the IWM here goes up or down, every 1% of a move in the IWM, this will go up or down 3%. So they can be quite volatile. But since we have, I have very good stop loss rules, I know I can protect myself on the downside, and I get triple the bang for my buck when it goes up. So I didn't show I'm not showing the pre-market activity here, but we knew that the core, there's a consumer price information data was to be released at 5:30 Vancouver time this morning. And so I knew that would be a big catalyst for a move either up or down, just didn't know which way. So when I didn't show, I'm not showing the pre-market data here, but I woke up at 20 after 5, and this was trading up here around $31. And I thought, that's interesting. So they're anticipating that this move is going to be good. Actually, why don't I just show the pre-market data? So here we're up around 31.30. Then right at 5:30, the data came out, and I guess the market obviously didn't like it. And whoosh, it dropped from 31.30 all the way down to like $28 in a matter of, this is a 5-minute bar, so it all happened in 5 minutes. So trading is, you can use good fundamentals and you buy good companies and whatnot, but at the end of the day, really is market psychology and supply and demand is really what drives all prices of stocks. And so looking at this was going up, and you can imagine yesterday going into this announcement, a lot of people, a lot of retail traders particularly, would be shorting this, expecting the price to go down. And there would be a whole bunch of others that say, no, I'm buying this, expecting it to go up. So at 5:30 in the morning, or before the market pre-market open, or before the announcement, you can see what happened here. The people that thought it was going up at 5:30 in the morning are saying, oh shit, because the market doesn't open until, here we go, 6:30, right in here. when the market opens. And they're saying, oh shit. And they're suffering a big loss. So what are they going to do? They're probably going to be selling. Now, the people that shorted the stock up in here, at first are going, oh crap. But then as soon as the announcement comes out, they say, yippee-ki-yay, they're in the money. So what are they going to do? They're going to buy and cover their short positions and book a nice profit. Meantime, the institutions are sitting back, watching what's going on. And around this point here, we go. So we opened, go back, we'll take out the pre-market data. So we opened here, went down, rallied a bit, went down a bit, came down a bit more. It took out this low very briefly, but then it didn't last. And look at the volume. The volume died off after the first 15 minutes, and then a big volume spike here. So the institution said, enough's enough. We're going to buy a whole bunch of stuff real cheap. And they started buying in here. That lasted a little while. It pulled back, like you would expect. And so then when they did this second move back up here, I jumped in and bought 29.10 is my price, my entry price. So I bought right there. Looking at yesterday's action here, I knew there was some resistance here at around $31 or so, actually up in here. I ended up selling it at 30. That's right. I sold it at $30.10. So I did, took some off here, took half of my position off there. And now I'm just riding the rest. So it's up, I'm up 9% on my position, on my remaining position. That was not huge. I mean, this is the kind of trade you wish you put your entire account in and you'd be up 10% in one day. But it doesn't work that way. I mean, even knowing stop losses and taking small risks, that's just a little too stupid to handle. So that's that trade. So I'm still in this. My stop obviously is way back down here, break even. So I got like lots of room to play with, so that when we go back to a daily chart, you know, if indeed we get a move back up here, up to the 50-day moving average, there's another $6, $5 or $6 in this. And you know, who knows? I mean, it could come up into this area before we start to really get some heavy resistance. So there might be another even $10 or $15 in this one. So what I say high risk reward. This is really low risk because I've had a very tight stop. It's an extremely liquid stock. And this could be a 10 or 20 bagger. So that's it for today. Yeah, can't add more than that. We'll see what tomorrow brings. After this big wide day today, I expect we're going to have some consolidation. And for longer term investors, there's still just nothing to do. We need to get into these moving averages here. Have got to curl up and start going in the right direction, going up this way. And right now we're still going that way. So stay in cash, stay safe. Cheers.